Hugh Sun is here on set with us. He's the banking reporter for CNBC.com. Hugh, interesting, right? Because even with the good, the B of A, you've got, as our analyst last hour said, maybe the deposit growth wasn't quite what he was hoping or expecting. Yeah. And then on Goldman, what's going on with some of the business units there? I mean, especially FICC obviously has been highlighted. The losses on Marcus. There is a lot there to blush about.
So two different buckets. With B of A, you take a step back, bigger is better when it comes to retail banking. I think we've seen that. That's very clear. All the four big banks have done pretty well. Differentiation between that, though. JP Morgan, their net interest income, I think, was up 45%, 49%, excuse me. Citi was up 45%. What was B of A up? 25%. So deposits down 1%, which is a little surprising given that, JP Morgan said that they added $50 billion in deposits thanks to the SVB post moves. So it's good. It's not great relative to JP Morgan, relative to some of the others. Now, Goldman Sachs is a different story. I think this is really the quarter in which they're still experiencing the hangover from, their misadventure with Marcus and their consumer efforts. So you saw that they took a $470 million hit on the offloading of a bunch of those loans. And at the same time, look, they're selling something called Green Sky, which they bought about a year and a half ago.
Right. For
$2.2 billion. Now, they bought it in 21, I think, or the late 21. So they bought it at the peak of the fintech valuation bubble, and they're going to try to sell it now. So you guys tell me how that's going to go.
Yeah, right. And I wonder, David Solomon has made a big point about wealth management and asset management being their future. It was a good quarter in that division. I think it was up 24%. But they missed, I guess, on the top line compared to what analysts were expected. What do you see for that business? Are they hitting their targets? Are they getting to where they need to go with that business based on what you saw in the quarter?
Yeah, so wealth management and asset management missed by about $500 million because that's where the sale of the Marcus loans actually flowed through. Okay. So more or less, if you exit out, they basically hit. Now, the other thing is just is difficulty in understanding the ins and outs. If you looked at that, the paragraphs dedicated to wealth management and asset management, it's pretty opaque. It's really tough to understand. It's not simple like a bunch of places like Morgan Stanley, which is tomorrow morning.
And you had the equity markets going up in the first quarter, and so that just immediately translates into higher assets under management. So you just wonder what it's going to do if markets are flat.
Right. And what's Green Sky?
So Green Sky is, if you are a contractor and you want to be able to extend loans to the people who, who are going to hire you for a gig, they extend credit. So, they've got relationships with places like Home Depot and a bunch of other folks, tons of merchants. They were super excited about this business because it was them penetrating Main Street further in a way that seemed to make a lot of sense. They had a lot of good things to say about it. And yet you can't get away from this idea that there's buyer's remorse. They just bought the thing. They bought it at a premium, and now they're looking for a buyer.
Yeah, it's a fascinating turn of events.
It'll be remorse depending on what they sell it for, right? That'll be the big question.
Or the degree of it, yeah. Hugh, thanks very much. By the way, now, so we sort of put sort of a pin in bank earnings season, or when do we hear from Morgan? Is that tomorrow?
So Morgan Stanley's in the morning, and I think, look, regional banks are in a class of institutions that we don't really look at typically in terms of their earnings very closely. We're going to do it this time.
Yeah, all the more important right now.
All right, Hugh, thank you.